Let's talk about Series LLC for real estate investment. And the thing is, a lot of times people talk about real estate investment in connection to an LLC. In today's conversation, I want to talk about an SLLC, so Series LLC in connection to real estate investments. So here's our overview I want you to pay attention to. First of all, let's go back to the definition. Let's talk about SLC 101. So a Series LLC is a relatively new entity structure that first came into vogue in Delaware about 30 years ago. Okay, and what I want to say here is that right now, as of the date of this show, a Series LLC is still only available in 16 states in the District of Columbia. So you can see that out of 50 states, you only have 16 that really sort of validate this structure. While each qualifying jurisdiction treats SLLCs a little bit differently, maintaining diverse formal legal requirements. An SLLC universally contemplates the creation of a master LLC. So basically, you have a master LLC. Sometimes people call it a parent LLC, and so you have a parent LLC, and then you have separate child LLCs beneath it. Okay, so when you think about Series LLC, think about a master LLC that actually generates child LLCs. Okay, and as an entity structure, a Series LLC is kind of comparable to a corporation with subsidiaries. So that, and basically the SLLC is actually formed and operated correctly. And what will happen here is that each child LLC beneath the master LLC is only liable for its own debts, judgments, and other obligations. So this is kind of important. And so as otherwise stated, a child LLC has no legal duty to satisfy the debts, judgments, or other obligations of the master or sibling LLCs. What I'm trying to say here is that basically, if you say, let's say you say A is actually the parent LLC, and B, C, D are three child LLCs. So B is now responsible for C, D, or A debts. Okay, so everything is kind of separate. Now, when we talk about forming a Series LLC, well, this is typically simple and straightforward. You have articles of organization of the master LLC are filed with the Secretary of State or a similar agency in the jurisdiction in which the investor's property is located. And then, depending on the states, the investor formally designates child LLCs. In the alternative, and again, depending upon the domicile of the property, the master's LLC's operating agreement is actually amended to account for the formation of each child LLC. So you have all kinds of possibility there. Okay, so the possibilities are there. And one thing I want to say also is that in most jurisdictions, each LLC in the series, master and child, requires its own federal employer identification number, bank account, record keeping, and operating agreement. Boss, welcome back to the show. It's really a pleasure to have you here. Make yourself comfortable. You are going to enjoy today's conversation. Now, let me give you a few pro tips here. Okay, I want to talk to you about a couple of reasons why a Series LLC is actually the best option for your real estate business. The thing is that first of all, when we talk about Series LLC, you got to think about the what? Liability protection, right? You want to actually protect yourself against the liabilities. Just in case something happened, you do not want to be personally liable. You want to preserve your personal assets. So Series LLCs help you organize your real estate asset when you really think about it. Because, by the way, I first need to tell you the states where a Series LLC is actually validated. So you have, I said 16, but I did not designate them textually. So now here they are. You have Alabama, Arkansas, Delaware, DC, so District of Columbia, Illinois, Indiana, Iowa, Kansas, you have Missouri, Montana, Nebraska, Nevada, North Dakota, Oklahoma, Puerto Rico, Tennessee, Texas, Utah, Virginia, and Wyoming. Okay, obviously Puerto Rico is not a state, but I'm sure you got it. So basically, when we talk about some reasons why a Series LLC is the best option for your real estate business, first, Series LLCs help you organize your real estate assets, because once you set up a Series LLC, it's much easier to create your subsidiary or sell LLCs that will operate under the parent or master company. What happens here is that each subsidiary or series is organized using the original operating agreement for the parent LLC. And the LLC operating agreement for your real estate business needs to describe the intended structure in detail in order to ensure compliance. And with this type of company, each subsidiary LLC acts as a business within the business. Each sale LLC will also have its own manager, members, owners, bank accounts. Very important. You want to really segregate those things here. The second thing is that series LLCs have reduced startup costs, because real estate investors often choose series LLCs because this business structure streamlines the organizational process that is required by state and federal agencies. And series LLCs only require one registered agent, which can be a nice savings. So overall, a series LLC and any additional sale LLCs that operate and are added under the umbrella company will cost you much less than forming multiple LLCs. Of course, if you operate in multiple states, you will need to pay additional registered agent fees in each state where you do business. Boss, I want to quickly remind you of today's topic. We are having a conversation about Series LLC for real estate investment. Another thing I want to say here is that a series LLC provides more liability protection. And so many real estate investors might think they don't need a series LLC because they can just buy liability insurance to protect themselves from lawsuits, right? No, this is a mistake. Getting liability insurance is often a great idea, don't get me wrong, but you shouldn't assume that liability insurance will protect you from all the risks and headaches associated with bad tenants or declining investments, especially when you consider the limitations on protection that many insurance policies contain. For example, let's assume that you're not structured as a series LLC and an unhappy tenant decides to sue you, claiming there is a mold problem. Now your headache and legal problem just got worse since mold claims are not covered under your liability insurance. So by not being structured as a series LLC and relying only on liability insurance, not only could you lose out on the assets of the property in question, but your other investments could fall prey to this lawsuit because you didn't separate them using the umbrella model of a series LLC. See what I mean? So this is what it is. And another reason is that you have reduced administration and paperwork, because establishing a series LLC means less paperwork. You only need to register with the state once instead of multiple times for each LLC. You only need one operating agreement, and you only submit and pay one annual report fee. This can save you a lot of cash, a lot of time and money also, a lot of time also. And series LLC documents can be just a few pages and can simply state the series name, the managing party, and the members for that particular property or series. And governing of the subsidiary LLCs will fall on the original operating agreement that was established and filed for the parent company. So this is kind of cool. So when you really think about it, we're talking here about like a lot of time saved, okay? Because the whole thing I'm explaining to you will save you the time and effort of making separate filings for each entity, and will, as well as the filing and future renewal cost. Also, one thing I want to say here is that series LLCs can actually reduce risk, because as a real estate investor, basically you're part of a group that's often advised to separate their holdings for one very simple reason, right? Doing so can lessen the risk of any one property affecting the others due to a lawsuit, bankruptcy, or other unexpected liability issues. See, the whole thing is that real estate is a very dicey, it's a very risk-prone industry, if you will. So you really got to cover your butt, so to speak. So with a series LLC, you basically achieve that. So each individual real estate LLC under the parent company has the same protections that regular LLCs have. This can be a lifesaver, especially if you take into account the example that I gave you earlier, where the tenant from one of your properties decide to sue you due to mold. And if you don't have a series LLC, in other words, you have all your real estate holdings operating with the one bank account as the same company, then any profit Any profits or cash used for those other properties could be at risk if that lawsuit goes in your tenant's favor. And chances are that lawsuit could also go in your tenant's favor. Okay, I don't care how astute your lawyer is, there is a possibility. So the one thing I need to say is that you need to keep in mind that a series of LLCs is not a magical shield. In order to maintain the protections for each LLC, be sure you understand the rules in your state and follow the guidelines for maintaining your series LLC status. So what I'm trying to say is, even if the whole thing might sound a little easier or a little like flexible, you always want to read the paper. You want to read the law. You want to make sure you understand the law in your specific state, because whatever is valid in New York might be a little might not be valid in California, and whatever is valid in Georgia might be interpreted differently in Nebraska, right? So you got to always make sure that you have the news, you have the info. You also have the opportunity to own more than one property. So by setting up a series LLC, you will have the ability to build on your portfolio of properties by adding more sales at any time, with each being treated as separate units from the umbrella LLC. This all falls under the original operating agreement created when the parent company was first formed. And as a reminder, each series can even have a different manager and different members. So again, flexibility. Also, I want to quickly remind you, to this topic, we are having a conversation about Series LLC for real estate investment. Now, let's talk about choosing a Series LLC for your real estate businesses. What kind of strategy should you have? Okay, you need to understand that a Series LLC is always great, but there are two things you need to pay attention to. First of all, this business structure is not available in every state. I give you the states where the Series LLC was available, so 16 of them. So please, first, you want to double check to make sure that your state actually validates this legal structure. If yes, what you want to do is you want to organize yourself, because see, if you have to create all those micro businesses under the main umbrella, you need somebody to manage that for you. And you can actually have a VA, a virtual assistant, or you can have like a regular manager really take care of your real estate holdings, or you can do them yourself if you have time. Okay, so here is the decision I want you to really pay attention to. I want to talk to you about the pros and cons of forming a Series LLC for a real estate investment, because not everything is rosy. Okay, of course it is ideal, but not everything is rosy. But I first want to talk about the rosy part, and then I'll talk about the not too rosy part. So when we talk about the rosy part, the pros, you have the ability to reduce liability, to minimize expense, and to consolidate federal income tax preparation. Let me break it down for you. Reduce liability. So if one series gets sued, other series are not liable. For example, if someone falls and becomes injured at one property, only the assets of the series set up for that property are at risk. You are able to minimize expense. So regardless of how many series will be part of a Series LLC, the business pays only one formation filing fee. This is kind of cool. And you are able to consolidate federal income tax preparation. So with this properly structured Series LLC, all series in the LLC can be reported on a single tax return for the Series LLC. In other words, when you file your Form 1065, you can actually consolidate the income information, the expense information under that form 1065, and you can actually just have you can issue one Schedule K1 if you are the only owner of that series LLC. Now let me talk to you about the disadvantages of a Series LLC for real estate investment, because not everything is rosy. I've said this before. So the thing is that a Series LLC is not an option for every real estate investor. And unfortunately, not all states allow businesses to form a Series LLC. I gave you the name before, so now you have them. And the thing, okay, in case you don't remember, I'm going to repeat them here So Alabama, Delaware, DC, Illinois, Indiana, Iowa, Kansas, Missouri, Montana, Nevada, North Dakota, Oklahoma, Puerto Rico, Tennessee, Texas, Utah, Wisconsin, and Wyoming. And although California doesn't form domestic series LLCs, the state does allow series LLCs created in other states to register as a foreign entity and do business there. And so another potential disadvantage of the series LLCs is that tax treatment and reporting requirements vary depending on the state. So the thing is that, this sort of this lack of clarity is not really good, because sometimes the rules are not crystal clear. States might treat each series as a separate tax entity, or have the master LLC and all series treated as a single entity, which you do not want. Okay, at the end of the day, you don't really want that. And as I said before, having a series LLC will require some work in terms of maintenance, because think about it. You need to, so basically, when you form a series LLC, you might have to file DBAs. If the individual series in the series LLC will have names that do not include the first and last names of the LLC members, owners, states will also require filing DBAs for the series fictitious names. So DBAs, doing business as. You need to obtain EINs, because the master LLC in each series that is part of it must obtain its own EIN. You need to designate a registered agent. So a series LLC must appoint and maintain a registered agent in each state where the master LLC and any series are located. You need to set up business bank accounts. So you need to have individual bank accounts for the master LLC and each series, so that their finances are handled separately. You need to obtain the necessary business licenses and permits. So this will actually vary depending on where the main LLC and the series underneath are located. And so you also need to establish operating agreements. So a series LLC should have a company operating agreement that sets forth how the master LLC should be run and all roles and responsibilities of members and managers. Okay, and a series LLC's operating agreement will also need to include language explicitly explaining that each individual series in the SLLC has its own operation, its own business operations, and is therefore not responsible for the legal actions and debts of other series in the LLC. So you can see that this level of granularity is what really discourages some people. So basically, sort of wrap up to this conversation. So when you really close your eyes and think about a series LLC for your real estate investment, you got to understand that basically you have a lot of pros and you have a few cons. What happens here is that you need to understand what is your opportunity cost. Overall, based on our analysis, and we've been doing this, we've been actually following this topic for more than 30 years. Basically, you're always better off if you have a series LLC, because no matter how protected you think you are, if something were to happen, you want to insulate other LLCs from that problematic, quote unquote problematic LLC. And I'm not even talking about protecting just your LLCs. You also got to protect yourself. You got to cover your butt. So you want to preserve your personal assets, and the best way to do this is to actually to have this sort of quote unquote convoluted structure, whereby you have a series LLC that really umbrellas sell LLCs. One thing I also need to say here is that you are also thinking about if you forget about the administrative part, that's a little demanding, because you need to actually manage every sale LLC individually. If you're able to navigate that, and we would advise you to actually have VAs. Nowadays, you can hire VAs, you can hire virtual assistants online, and they'll take care of everything for you. But you need to set that up at the beginning. So once you do that, you're able to focus more on the front office, on the sales generating, on the revenue generating part of your series LLC. That's what's going to help you in the long run, because because you do not form a series LLC just to dodge legal battles or dodge legal risks. No, you're forming a Series LLC to be able to make money, to be able to generate revenue, to be able to pay your taxes, of course, to comply with regulations, but most importantly, to preserve your personal assets. And everything I told you in today's conversation, if you have any question, let us know in the comment section. Tell us your the state you're commenting from, so we have a clear idea, because every state has different LLC laws, and we need to first make sure that your state allows Series LLCs. Okay, so let us know in the comment section. But also, please feel free to hire an attorney, have someone who knows the law in your area to kind of help you out. Thank you so much for your attention. I really appreciate it. In today's conversation, I spoke to you about Series LLC's Series LLC for real estate investment. So I give you the overview, the pro tips, and then I give you the decision where I spoke about the pros and cons of forming a Series LLC for real estate investments. Thank you so much. God bless you. I'll speak to you another time. Until then, remember, stay marvelous.